Great. I see we've got people streaming in. Wonderful. Thank you all for joining us. I'm just going to give it a couple of seconds as people start to come in. But as you all do come in, thank you so much to everyone who's made the time to come out on a Thursday afternoon to this webinar. We'll be beginning shortly. Thanks once again to everyone who's made time to join us for this webinar. Today we are going to be chatting about corporate foundations. Specifically, we're going to be looking at the CSI function in organizations and the kind of pros and cons of it being managed externally through a trust or an NPC versus it being managed internally through the CSI department inside a company. I see quite a few people have come through, so thank you for that. I'm going to start with the introduction now. And thank you all for joining us. So in today's program, I'm going to be speaking for hopefully less than 10 minutes, just giving a brief intro and a welcome. I'm then going to be followed by a panel discussion, which I'm going to facilitate between Nicole Copley from ngoLAW, Tseho Bokaba from Momentum Metropolitan Holdings, and Arthur Mukuva from MTN South Africa Foundation. We'll follow that up with a moderated, so we'll start with opening statements. We'll follow that up with a moderated Q&A, and we'll try and pull as many questions as we can out of the Q&A function. I do want to ask, please, that all of the participants, that you use the Q&A function in Zoom to ask your questions, and as the discussion goes along, I will try and bring in as many of those questions forward as we can. We do only have an hour to do this, and there's quite a bit of information that we would like to go through during today's session. So I want to start off with a poll, and Abdullah, I'm going to ask you to pull up the poll, please. I'd just like to get a sense of what type of organization you represent. And as you are answering that, I'm going to move on, and I'm going to give you a brief introduction of Trialogue. Now, most of you that are in this webinar are quite familiar with us, so I'm not going to spend too much of time on it, but for the new faces, and welcome to everyone. Trialogue is a niche consultancy service. We work with businesses to support them to become better businesses. And there's a number of services that we offer. Social impact advisory, which includes CSI strategy development and implementation, as well as integrated thinking and ESG advisory. And then we've got a monitoring and evaluation unit, as well as corporate reporting. Besides that, there's also the thought leadership work of Trialogue. And through that work, we try to showcase interesting and new work that companies are doing in the space of in the developmental sector in South Africa. And through those platforms, we've got the Business and Society Handbook, which is our annual publication, and that's focused on the research into CSI trends in South Africa. As well as comparisons to some of the work happening in other countries. through our partnership with the Global Exchange Network, the CCP. We've also got the Business in Society Conference that's coming up on the 9th and 10th of May, and I'll give you hopefully a bit more information about that later. And then we host the monthly webinars, which this is a part of. And we've got the Knowledge Hub, which is a great online portal that allows the sharing of information and topic and industry leadership pages. So I just want to provide a little bit of context before we dive into the discussions today. So in 2021, when we did our research for the handbook, one of the questions we asked was, we asked companies why they structured their CSI departments, or what's the rationale for structuring their CSI function externally, either through a trust or an NPC. And about 71% of companies reported, or that did have an external trust or NPC to manage the CSI function. About 71% of the companies reported that credibility of structure was one of their rationales. And about just over half of the respondents indicated that it's in some way related to the expertise of trustees and the ability to appoint external representatives as trustees. What's interesting is that a much lower proportion of respondents reported that the rationale is around tax reasons and the ability to attract external funding. And I'll speak about that in a couple of seconds. And then just, moving on from that, in 2021 as well, 88% of corporate respondents that had an internal structure of the CSI department or function indicated that business integration was quite a large motivating factor. 88% of total respondents said that the rationale for having the CSI function internally was for greater integration with business and sustainability agendas and part of the broader company social impact. And I just want to bring in the sort of house view of Trialogue into this as well, that we do take a position that from a strategic CSI perspective, integrating the CSI function into a company generally helps to integrate the business and the sustainability agendas quite nicely, and it also allows the broader company strategy and social impact to run across all of the work. And the recommendation is really mostly around external. If the CSI function is also going to be raising funds externally, then to look at an externally hosted CSI function. But we will speak about that in a couple of minutes. I do want to bring up the second poll question, please, Abdullah. And there I'd like to know from the respondents, do you think more or less companies will be utilizing independent structures for their CSI function over the next few years? And thanks. Cool. I'm going to move on very quickly. So just in terms of the changing landscape that we've seen from 2020 to 2022, through the research that we've conducted, we found that the CSI function in companies, in 2020, about 65% of companies had the CSI function internally, and only about 10% had an NPC and 25% had a trust. So only about 35% in total had an external function. And we find that in 2022, that's actually changed a bit. Not so much with trusts, that's moved up a bit, but NPCs have increased quite significantly, and the internal function has actually decreased over time. And this also contrasts interestingly with research from 2013, 10 years ago, in the 15th edition of the handbook, where the numbers were almost the same as 2020's numbers. About 66%, if I'm not mistaken, of the CSI function was internal, and the Section 21 companies, or the NPCs, made up a smaller amount, about 6% or 7%. So we are seeing that over time, we are seeing that the number of NPCs in particular have increased. So I'm now going to hand over to our panelists, and thank you for joining us. We've got Nicole Copley, who's a specialist lawyer dealing with NPOs at ngoLAW. We've got Cheho Bokaba from Momentum Metropolitan Holdings, and she's the Group CSI Manager, and Arthur Mukuva from MTN SA Foundation as the General Manager of the Foundation. So I'm going to start by posing a question to Nicole as opening. I'd like to ask Nicole to give us an overview of the structures available for managing CSI internally and in the company, or as a separate legal entity. And also, if you could please briefly describe the kind of three legal options: voluntary associations, charitable trusts, and nonprofit companies. Thanks. Over to you, Nicole.
Thanks, Riyadh. Thanks for hosting me here, people. And just Riyadh, if you ever need another job, you could get one in voiceovers with that husky voice. I don't know if it's always like that, but that's another job opportunity for you, I think. Thanks for the introduction. I think opening statements is a bit of an adversarial kind of way of saying what we're doing. I'm not that sort of lawyer, for the record. I'm not an adversarial one. I was once upon a time a corporate lawyer, a business lawyer. I am tax qualified, but I've been working for about 30 years plus now, so don't look at my gray hairs, in the nonprofit sector. And I am the founder, as Riyadh said, of ngoLAW, which is a one-stop, efficient, focused legal compliance governance services. We do it all in one place for nonprofits of all shapes and sizes. And we believe in giving pragmatic and value-laden services to our clients. So that's me. And let me just share my screen, and somebody needs to allow me to share my screen, please. There we go. Let's try again. Okay, here we go. And I think that's me. Okay, am I there? Thank you. Great. So let us begin with a little look at the main kind of topic, as a brief overview of the keeping it in costs, or taking it out, in or out, for CSI. And this is just to show you the main legal differences between them and some of the practical bits too. So of course, if you keep a CSI project in-house inside of the corporate, it is owned by the corporate, belongs to the business or to the corporate that is carrying out the work. Whereas if you set up a separate legal entity, and this is actually a very important distinction that not everybody grasps, or maybe people do grasp it and that's why they don't do it, is it's a nonprofit, whichever kind of nonprofit it is not owned by anybody. It's not capable of being owned. So it's kind of, you set it free into the universe, not entirely free, of course, because generally when you set up a CSI-led kind of nonprofit, you are maintaining very strong ties to the mothership, but we'll talk about that a bit more later. So typically, if you keep it in-house, your running and your admin costs are all absorbed. I've seen CSI projects which have gone external, where in fact the founding corporate is still absorbing the running or the admin costs and writing those off internally for tax with nobody noticing. Often in practice, with keeping it in-house, if the CSI project is big enough, one is setting up a separate bank account anyway. So that's, if you set up a new organization, of course, you have to have a separate bank account for that. Typically, an in-house CSI project is self-funded. It's usually funded just by that corporate or people within that group, perhaps if it's a group structure. Whereas, and of course, in terms of tax status, the expenses that are being used to run the CSI project, typically those are actually internally being claimed as tax deductions. And those will be being justified under kind of marketing expenses or stakeholder engagement or all sorts of other categories of expenses. The warning sign there is that depending on how stringent your auditors are, you will get to a point where somebody's going to say, okay, that's not an expense incurred in production of income. It's really not. You're now actually doing too much in terms of that. And at that stage, that might be one of the indicators to break free and actually have to set up something separate for a tax reason. Of course, you can't have tax exempt status, and you can't give 18A receipts to anybody because you can't get that as a corporate, whereas your separate legal entity, depending on what kind of work it's doing, can get PBO status, probably 18A status. Your ceiling on tax deductible donations for donors in terms of the 18A is, of course, 10% of taxable income per annum anyway. Okay, so that's just a broad overview of some of the differences. And then just having a look at the nonprofit sector, this is the stepping out really big view. These are your three main types of legal entities, your three only types of legal entities that can operate as nonprofits in South Africa, and their kind of characteristics. And just to note that the thing that they all have in common is none of them can be owned. All of them exist for a purpose. They primarily have to exist for a purpose as opposed to primarily existing for profit, major distinguishing factor. They can apply, any of them can apply for NPO status with DSD if they want to, or if they have to under the new legislation. And any of these can apply for tax exempt status with SARS. So just turning quickly to the first on the list, and this is the voluntary association, often mistakenly named NPO in the nonprofit sector, and that is because of the way the NPO Act is drafted, actually, that it just creates confusion, and also often people with DSD muddle things up and muddle people up. But the very important thing to notice in terms of a corporate thinking about setting up a separate structure is that the voluntary association, which is established under common law, no registration is necessary, just you draft it's a group of people in a room adopting a constitution. It's inherently a democratic structure. You have to have a hoi polloi of members at the bottom of it who gather each year at the AGM and vote perhaps an entirely new board on. That's just the nature of the beast. And I often find people, whether they're corporates or whether they are individuals who kind of driven by a passion and need to found an NGO, who want to do the quickest, cheapest, fastest thing to do. And so they sign a constitution and they get themselves into all sorts of mess and troubles down the line because they don't want members. They don't need members. They don't want that whole big thing that's meant to happen in the dance of the AGM every year. And so effectively they're pretending to have members, and they're giving also the wrong impression to their donors, and that their donors will expect them to have members and go, oh, you're that sort of organization. No, actually rather not. We want something a bit more stable. Anyway, so I would say just a big cross over that in terms of options for CSI. I wouldn't go that way for an external entity. Your ye old favorite in terms of foundation set up for CSI is your trust. And that will be because until the New Companies Act came in effectively in the year 2010, the 2008 Act, it was really the only option for a top-driven structure, by which I mean a kind of a tightly driven, held, this is the vision, not a great crowd of members. And that was because your erstwhile Section 21 company under the previous Companies Act was a public company as defined, and technical detail, but with a huge implication in that it had to have members. So it's effectively the same as shareholders, and it also had to have an audit and jump through all of those hoops. That all changed with the New Companies Act. And as a result, I haven't set up a new trust since 2010. And up until 2010, 80% of my filing cabinet was trusts. And that's because there was this seismic shift that happened. And I think you'll find, Riyadh, that those stats that you look where the NPC thing is growing is because a whole lot of people are going, oh, hell no, we don't want to deal with the Master of the High Court any more than we have to. And that is because, and look, under the new FATF push legislation, the General Laws Amendment Act that came through in the dying days of December, if anybody's been following that very exciting story, the Master of the High Court is going to have to introduce electronic systems. Whether those electronic systems will ever reach back into the murky depths of trusts formed in 1928 or however long ago is a question we're not sure how long or when or how that will take or how it will work. But currently, all processes with the master require every single trustee to get out an actual pen, and then each of them sign their names on the same piece of actual paper, which they send around. I find that people who are 30 or younger don't even know what the word original means anymore, are very unused to taking out pens and paper. And also, one then has to take those actual pieces of paper and lodge them with the physical office of the Master of the High Court. I know I'm banging on about this, but they then often lose them. And then you have to start all over again. Or if they don't lose them, they can take months and months and months to process. These are the reasons why we haven't registered any new trusts recently. And that is because the NPC model, which has emerged under the New Companies Act, gives you a whole lot more flexibility than the old Section 21 did. So you can set up an NPC with members, or you can set up without members. So here, so immediately anybody who was going to go, no, there are only 3 of us in a room, no members, top driven, we would have formed a trust, but now in fact, we're going to set up a no members NPC. And you're doing so in an electronic online environment, which CIPC entirely inhabits now. Electronic signatures, email lodging, pins being sent. It is an entire different world for those of us who have been working with trusts. Director changes taking 2 or 3 days. Trustee changes, 6-8 months. The difference is huge, right? So both of the sorts of NPCs, whichever kind you have, they're required to be registered with CIPC. You've got, now it's called a Memorandum of Incorporation, which is your founding document. Every time you update directors, you've got to do that on, and there are various other updates you've got to do. But it's quick, it's efficient, it's satisfyingly so. And also it gives, I think, this other level of credibility, and that people can go online and they can check and they can actually see these are the directors, they've been filing their annual returns, this is the kind of process. So the difference between the with and without member structure, and this might seem counterintuitive, quite often with CSI structures, I am often setting up a with member structure. And that is because under the NPCs, you don't have to have a huge, great crowd of members. You can, in fact, set up with just 1 member. And that is a neat way of entrenching effectively founder powers inside of an NPC, because your single member then is the one that appoints all the directors, can change the MOI, so effectively holds the strings in terms of mission and vision staying online. And can fire the directors and take big decisions. Okay, so the 2 ways you generally go is you either set up a with members with just the foundational people in, or you can set up a no members and then you entrench inside of the MOI the kinds of structures and details that you need for that ongoing, because the funder or the main funders typically want to have a majority say at least on the board. Okay, so that is my brief summary of the landscape, which is legal and which is available.
Thanks so much, Nicole.
Stop sharing so that you can take over again. Thanks.
Wonderful. Thank you so much for that that overview. I did see that there was a question in the chat. Are we going to share the slides? And it was answered in the chat, but just to highlight that, we will be sharing the slides as well as the recording and the write-up of the webinar after this. So thanks, Nicole. I'm going to now turn over to Tseho from Momentum Metropolitan Holdings. And I'd like you, as an opening statement, so Momentum Metropolitan Foundation is established as an independent NPC. And can you give us a brief overview of the kind of history of the NPC, with a reference to the merger between Momentum and Metropolitan, and the justification for using, or the rationale for using the NPC as opposed to a trust, and instead of managing the CSI function kind of within the company? Thanks. You're on mute. So.
I'm on mute. You would think 3 years later we're used to unmuting, but clearly not. Good afternoon, everyone. As Riyad has introduced me, my name is Tsahofa Zobogaba. Thank you so much, Trialogue, for affording Momentum Metropolitan Foundation to come and chat to you about our ways of work, if I can put it like that. So in about 2009, actually, when the merger between Momentum and Metropolitan happened, that's when the foundation was established. We took a decision to establish a foundation because of a very fragmented model that the business operates under, because we have subsidiaries of companies within companies, and that makes it very difficult, especially from an SED perspective, to manage your corporate social investment initiatives, especially if you want to be impactful in the way you do your corporate social investment work. It was very difficult for us because it was a very fragmented approach. It was a very fragmented way of doing corporate social investment. So we had to set up the structure where all the business units could contribute their 1% net profit after tax into this foundation that was registered as an NPC. So that process happened in 2010. And as a result of that, we saw a shift even in how we managed programs, even in how we reduced the number of programs that we supported. I'm told we used to have about 76 programs. We only have about 10 programs or organizations that we support now. So that shift has also brought in fewer projects to manage, but very impactful outcomes that we have through the initiatives that we support. And I think Nicole articulated the shifts or the choice to go to for an NPC as opposed to a trust. It's too cumbersome an exercise to go through registering as a trust. I think what the requirements there are just there's just a lot of requirements, and that's actually one of the reasons why Momentum Metropolitan Foundation decided to register as an NPC, because it's quite seamless and it essentially gives you the same benefits that you would get if you are registered as a trust. So I don't know if that answered all the questions, or if you need me to expand on anything, happy to do that. Unfortunately, I don't have slides. I'm not as organized as Nicole. Yeah.
No, if you came in with slides as well as Arthur, we'd need 2.5 hours. Thanks so much for that response. And then now I'm going to turn over to Arthur from MTN Foundation. And same question that I posed to Tseko, Arthur. What was the kind of motivation for MTN? Was it also about kind of moving together from a very fragmented approach, or was it something else? And what's been the experience so far? Thanks.
Thanks so much again, Riyad, and I must say again, thanks to Trialogue for organizing this session. I think it is really important to really find ourselves in this kind of dialogues where we really show each other, as well as the participants that are in the lobby, to really say that no, it's really good that we are sharing some of this information, because in that way, then I saw some of the questions that were being asked on the chat, that how difficult it is from being a trust and everything. And I think maybe one of the questions that I would have brought in was that as a corporate foundation, do you ever look into how do you partner with an organization? Do you care whether it's an NPC or is it a trust or is it a voluntary? As what Nicole has indicated. So I think that's really one of the key important things. So I'm really glad to be part of this session, and thanks so much. So I must say again, what we've been seeing over time, the MTN Foundation was only registered in 2007. But obviously before then it was just a charitable initiative that was within the unit, meaning that was just an internal part of just running the business. However, the most important thing, I think I just want to indicate the 5 key elements that really put us on this on the stage to say, look, no, it is really worthwhile to really create an NPC. Number one, obviously, talks about the funding model itself. That obviously one of the things that you really are a bit comfortable of is that there is a cash flow that is there from the business. And the good thing is that, again, with the cash flow that is available, you can easily implement and contract with a longevity view or vision in terms of exactly how you're partnering with the different NGOs or private sector in that matter. And the other second thing, just to quickly is that is the reputation, the brand reputation. So the good thing is that, again, we managed to have a full control of how can we increase our visibility in the areas where we get involved or in the intervention that we are doing. So it doesn't really only end in us asking the marketing team to do certain things, but we have that autonomous decision making in terms of making sure that how then do we position ourselves within the market that we're operating. Thirdly, obviously, is the independence. I think Nicole, my colleague, she has already elaborated more on it. Obviously, that once you have trustees, the key thing is that now there's a clear business strategy that can be set that will really dictate in terms of how the foundation should operate. It really sets the confinements within which we can partner and how we can deliver on our project, and how then do we measure and scale up our project in how we deliver it. And I think Nicole has already done justice in terms of exactly if you have to become independent, what are those key benefits? But more importantly, I think for us as the foundation, registered as an NPC, is the agility in terms of decision making. So the key thing is that once you are really an independent organization within the organization, it gives you that autonomous decision making in terms of being responsive into the market's need, being agile in terms of responding to some of the key things that are really required by the communities. I mean, we've seen that over the years, it has been a rigid process of doing CSI. But at this point in time, we cannot afford to be rigid. We need to be agile because our market is changing so much faster than ever before. We are experiencing natural disaster. And that's the reason why when you have a corporate foundation, it helps it to build on the sustainability element of it, because then you're no longer just looking into doing good, but you're saying that I want to preserve and make sure that we are building a sustainable community that will continue to make the business of MTN actually to be viable within the environment where we are operating. And the last part of it is the governance issue, which I think even my colleague Tejo has talked to it. Obviously, one talking about the ACD, how to measure it, the sector, ICT sector codes, then because it allows us now to say, look, no, what, because we're an ICT company or a digital solutions provider company, we can be able to really focus deeply using the capabilities of the business to be able to deliver on those initiatives. But more importantly, I think I must just say again, it allows you to have a strategic giving opportunities, meaning that our way of doing business actually is consistent with how the business operates. And this is one of the really benefits of really having the NPC as an independent organization, because it does have its own vision, its own strategic objectives, its own mandates, as well as its own values. But obviously, all of them are linked to the mother company, which is really the funder of the programs that are being done. And from tax point of view, you already know, obviously, and Nicole has already indicated, you can be able to get an instant tax deduction once you're already an NPC that is separate from the organization, because you can issue a Section 18A certificate. And that's really some of the things that I could just indicate. Thanks so much, Riyadh. If there are any questions, I'm available to take them. Thank you.
Thanks, Arthur. I'm going to turn back to Arthur and Tejo in a couple of minutes, just on the agility thing. I want to prod a little bit more about the potential or the increased agility of foundation. But I first want to turn to Nicole. There was a question in the chat or in the Q&A from Andrea Ferry, who asks, it'll be good to hear from Nicole how easy it is to transfer or close a trust and convert to an NPC instead.
Okay. The answer is not terribly easy, I'm afraid to say. And this is because you are starting something new and there's no conversion process. They're discrete, separate legal in ecosystems. They don't cross-pollinate at all, right? It's not impossible. And the good news in going trust to NPC direction is that the setup of a new NPC is so very quick. I mean, even with, we draft unique MOIs so that the organization has a proper, readable, usable founding document to use. And even with registering with unique MOIs, it's less than a week to register a new NPC, which is very unlike the time range for trust registration. And then what the thing though that you'll find is that NPC would have to get its tax exempt status before the assets and the reserves that are built up in the trust can be transferred, because it'll be one of the founding principles of the trust that it can only give on to something that has tax exempt status and does the same sort of work. So it means you've got probably, if you're going to do that sort of transition, and we actually handle quite a lot of them, more often actually from voluntary associations, which are people like, why did we set up this thing that doesn't suit us? But you actually have to set up the new co, get its statuses all in place, and then, so you've usually got like a kind of sometimes it's about a year's handover, because you want, sometimes people are still making donations that you don't want to miss into the old bank accounts. You've got to keep that thing rolling, but you're looking at a handover process. It is a handover process that you might find you just bless yourself about over and over again, though, once you've gone through the initial pain of it. That's, yeah. I must say, just in terms of what my colleagues have said here, their comments on consolidation and things not being fragmented, that's something, Shepherd, that I've definitely seen with corporates that have got like big structures. And they've typically got little bits and bobs of money coming in and little local branches doing all their own little things. And it's like, and you have a lack of control there too. And sometimes people can be doing stuff that's actually not properly on brand, or politically it's a bit worrisome. You never know. So this way you can bring it all together. And I think that is often actually a reason. And the other thing too is if you've got and look, I'm not saying set up a new organization if it's work. I'm never for having extra organizations that you don't need. If you can keep things simple and you can keep it in-house and run it like that, so much for the good. But often when you often have sort of piecemeal or placatory or reactionary kind of giving going on. You know what I mean? So you've got, whereas as you said, both Cherko and Arthur have said, you can in a new entity that runs all of it, you can have a proper strategic focus, and you can say, look, let's not. I'm not dissing it that it's like always frittering money away, but you can consolidate the funds and say, these are the big things that we're going to go for. And then you can actually see and demonstrate to your donors a real impact that's not little bits and pieces. And certainly the CSI projects that have evolved into big impactful organizations, it's been because of that. And it's been because of taking a big often brand aligned purpose and saying, this is the thing we're going to focus on, and then going for it and building a name doing it. And as soon as you're successful, then people want us. And that's in fact the lovely thing about starting a foundation as a CSI initiative, is you usually start with some seed money. So you can start to give yourself a track record and show your success. And then that's when the other corporates want to come in and say, hey, we're also part of this thing. Yeah.
Thanks, Nicole. I'm going to turn to back to the agility question that I had to Tsecho and Arthur. And I'd like you to comment on, I mean, especially over this last 3 years, in very recent history, we've seen a massive need for radical shifts within funding strategies. We've seen a need for very agile approaches. And do you think that the independent structure of the foundation was beneficial in that way? And if you can just give me a sort of a illustration of that, open to both of you. I don't know who wants to go first.
Yeah, well, I'm happy to go first, Riyadh. I actually found it very interesting that one of the advantages of the foundation, as highlighted by Arthur, was the agility, because for me, it's actually what's the opposite of agility? The rigidness of the process, because I find that when you have a board of directors or trustees that you report to, and there's certain processes that from an approval perspective, that when disaster strikes, for instance, if you don't have a certain budget allocated towards disaster relief or anything like that, then it becomes a very cumbersome process to get approval for that. So I actually don't see, I find that having a foundation, a board or a board of trustees or board of directors, it brings in a lot of complexities from an agility perspective. At least in my experience, that's how I've experienced it. You find that you are very late to respond because of all the processes that you have to follow, all the approvals that you have to get. You can only respond about 2 weeks later, especially if you don't have that money that is allocated somewhere for things like disaster. But yeah, so in my opinion, the agility is not there. And I also see it even when you're looking at the shifts from how the evolution of CSI, how CSI has evolved, where we are now shifting towards a strategic CSI where both developmental as well as business needs are met. Or to shared value. It's very difficult when you have an independent board of directors with divergent views and opinions, when you have to come in and convince them why you have to align with this initiative that supports business and can give us both business benefits as well as societal benefits. It's very difficult to get to that position where they see it. And another thing is that it frustrates the business. So you're finding yourselves in a situation where business doesn't see you as someone who is willing to come to the party and support them. And the foundation sees you as someone who's looking at the interest of business and neglecting the interest of the community. But there's that sweet spot that we need to come to, where both stakeholders are satisfied, if I can put it like that.
Okay, thanks so much again, Tseho. I to some extent I do agree to your point that obviously yes, there is an element of bureaucracy that can happen, but I must just indicate that obviously sometimes it really depends on how the board of trustees how the structure has been set up in terms of exactly approvals, because that's one of the things that we try to avoid. I mean, working in the digital solutions provider company, you know that the name of the game is agility. You gotta really be the first in the market. You cannot wait for somebody to do something else and then you follow and you do certain things. And I think again, another thing is that maybe because of the fact that we are really within we are working within the confinements of the ICT sector codes, meaning that obviously even the work that we normally utilize, we need to utilize the strength of the business in terms of the kind of initiative that we're doing. So obviously the principle of shared value becomes really the core of how we deliver on the project that we're doing. And even for us, I mean, I think maybe without really taking so much time with regards to the constituents that makes up the board member section, they determine again in how you can be able to be agile and be able to make sure that you're effective in delivering on your project. But I must say, Riyad, I think for me, the key things is that one, when you have the board, it will really help you actually, one, to really become relevant into the market, because sometimes we get boxed in the office when you're working, we think that no, things is what we are seeing people telling us in the news. But when you have the board, people that are independent of the organization that are outside there, they can start telling you and informing you based on the different research that they can be able to get, meaning that you become more relevant, you are well more aligned, and obviously you instill the principle of shared value in terms of exactly how the foundation should be operating. So I mean, at the moment for us as the foundation now, all the projects that we're doing, actually, I must say 80% obviously we're really moving towards the strategic initiative that we're delivering on. But obviously we always have that 10 to 20% that we normally leave it for philanthropic, meaning that it's just more of a reactive, where we say that the board has to pre-approve it from the beginning of the year that, know what, we have set aside 10 million rand, whereby if there are any event that requires a need, you don't have to come back to the board. You normally, they appoint a proxy, which is one of the directors within the business, who normally just effectively utilize those things. And I must say that, I guess maybe it just really depends on the structures of how the NPO or the NP, yeah, the NPO has been set up. The NPO has been set up in that way, then it really helps you to navigate around some of the issues. But I think for us, again, the key thing is that, again, when you have the independent body, I mean, I must just indicate a good classic example with us at the MTN at the moment. I mean, we know that one of the key issues with load shedding is the challenge with regard to our network, meaning that there's a lot of instabilities in our network offering. And then one of the key things they were asking, the business came and said that, no, foundation, you are really in the communities. What are the things that you're going to do to assist us alleviate some of these issues that we're faced with? And I must say, I'm just using load shedding as one of the examples, but obviously there is vandalism that's happening, there's obstruction, people that destroy it. People that are negating the key assets that really are helping helping them actually to really access economic opportunities. And then how do we do it? And then we then said, no, what, guys, we're not gonna create security companies that are gonna really help to preserve this network, but we're gonna really utilize the channels, because in how we do our initiatives, key to it is really the whole stakeholder mobilization and stakeholder mapping. So that in such a way that the projects that are being delivered, that's the reason why when we refer to the shared value concept, it is talking from the business point of view, the CSI community and the community at large. And that's really one of the reasons why the foundation should really be augmenting some of the business initiatives that really they want to really overcome as the key challenges that they're facing. Obviously, that issue of striking the balance, it always exists. And I must say it's ongoing and it's continuous. But again, with a proactive engagement with the regions, so the guys that are really working on delivering for the business, actually, it really helps them actually to really know that what does the foundation seek to deliver in this year. Then they already know from the beginning of the year that, you know what, their foundation is going to deliver, and they're going to partner with this NGO and this NPO, with this other organization. In that way, it really helps actually to circumvent some of the possible bureaucracy that can be created by the being independent body that really governs how the foundation should operate. Thank you.
Thanks, Arthur. I've got a question in from Pearl from Pearl from Standard Bank, and it's for Tejo. It's to what extent did the formation of the NPC entity assist in formulating an inclusive socio-economic development strategy that speaks or is aligned to the fragmented businesses that is the full family of Momentum Metropolitan?
I think I'm not going to answer because Pell is my friend and I think she's just being naughty. I'm kidding. I'm going to answer. So it actually didn't. And this was actually revealed by an independent study that we commissioned through Trialogue, where they looked at all our programs, and the missing thing was the alignment to business. So in all of our programs, or majority of our programs, out of the 10 programs that we had at the time, there was I think only 1 or 2 that were aligned to business. So it didn't really give us that alignment to business, because you can imagine there's quite a number of, I mentioned that there's companies within companies. There's Momentum Security, Momentum Insure, Momentum Corporate, Momentum Securities, and all of them have different focus, business focus areas, if I can put it like that. So from a CSI perspective, it's very difficult to align to all of them. But what we did is that we selected a strategy that is very relevant and that addresses the need that is quite a pressing issue in the South African context, which is youth unemployment. And what we do there is where Metropolitan, for instance, they have a huge focus on young people. And I think every business has actually identified, or they've seen that young people is actually, it's a demographic dividend, and we must all take advantage of that. So everyone can align to young people being a demographic dividend in different ways. But it's something that we are still working on. It's something that we need to improve on, especially based on the recommendations that we received from Trialogue. I hope that answers your question, Pal.
Thanks. Paul's got another question for Arthur, but I'm going to get to that in 2 seconds. I want to ask a question around alignment to business. And I'm going to start this question. I'm going to ask Nicole to start this with her view on it, and then over to either Tech or Arthur. So on the one end, we are talking about making sure that we do have alignment to the business in there, but isn't there an inherent risk in an independent foundation where over time there can potentially be a bit of a divergence where the work of the foundation starts to go, in one direction, and it establishes itself but it starts to remove, because of its independent structure, it starts to kind of remove itself but from the core business. And there's a specific example that I've got in mind. So I'm not going to mention the company's name, but it is one of the global tech companies that have been criticized for this, where on the one hand, the foundation was doing, and the massive global foundation was doing massive work around, increasing kids, the increasing kind of education, basic education that's provided to kids, and a number of good things around early childhood development and that. But at the same time, the work of the company itself, especially through the kind of mining and the negative impact that it was having in around the cobalt mines, and that it conflicted, the work of the company conflicted with, the work that the foundation was seeking to achieve in that. Now, obviously, that's a very drastic example, and that's an example where the foundation is doing something totally different from what the company was doing. But don't we run the risk of that inherently in having an independent structure where foundation ends up over a decade going in one direction and company is not in the same direction?
So this is such a delicate territory. And in fact, I was going to put my hand up and talk about also the fact that alignment to business is also, there's a fine line that one has to watch, right? Okay, so Rehad, in your latest example, I would think in this example, divergence probably from the company's business was probably intentional as opposed to mistaken, because they were trying to say, but hey, look over here at this shiny, nice thing we're doing instead, right? But I mean, to borrow Checho's phrase, there's a sweet spot to be hit here, right? Because the one thing to remember, and there was a question in the chat earlier around, and it's aligned around BEE-SED points and whether those can be claimed, should rather just be claimed internally as an 11A tax deduction or an 18A deduction. Same kind of question, okay? And if you answer that question, in fact, you can answer some of this question. So one of the reasons alignment to business is treading a fine line is because if you're going to issue an 18A donations receipt to anybody, it has to be a true and proper donation. It can't be a disguised payment for something that's actually a marketing service, right? So, and to me, if you go back to the question of, is it an 11A tax expenses in production of income, or is it an 18A? If you can satisfy the 11A, is it expenses incurred in production of income, then whether it's internal or external, then it's a normal tax deduction and you pay the money over and you claim it as a normal tax deduction. If you cannot, however, justify claiming it as a normal tax deduction inside of the business, then it's inherently, to me, it's not that aligned. You've got no tangible benefit to the business coming out of that donation or that payment being made. And then you're probably in a place where an 18A receipt can be issued because it is a real donation. So that's the one thing about that you've got to watch. If you're too closely aligned, you've got to make sure that you're not issuing 18A receipts for things that are not really true proper donations, right? And then in terms of the divergence, and this is, we get back to, and I see my friend Warren actually asked a question around this too, and around going back to the agility question, it's around your composition of your board. Okay, so going back to the agility question, I don't think that's around whether you're a trust or an NPC. To me, that legal structure is immaterial. It's around who's on your board. It's around the balance of people that is on your board, and then it's around your delegation of authority framework. And as Arthur said, how much power is actually given to the people who are running the projects on the ground, as opposed to the sticky fingers of how much the board is trying to keep and control close. And that will be, and I'm looking at the two faces, the Checho and Arthur in front of me, saying that's institutional culture, right? And that's it's such a clear example of different industries and different institutional cultures and how that's having an impact on both of your foundations. Actually, such an amazing example, really. because I wouldn't have thought of that kind of thing, but that'll be true. Yeah, so it's who you have on your board. And I think there is, once again, there's a sweet spot to be hit, because you want the independent people on for the credibility, and you want that other outside perspective. You want to be truly aligned with society's values, as opposed to just hitting the business path and being narrow tunnel vision like that. But you also want to remember who's giving the money, and you've got to keep the donors on. So it's balancing that board, and I think balancing it the right way. And I don't think there's a right way. I think it'll be a way that is authentic to you, that works, and that gives you responsiveness, agility, independence, and all the things in that lovely package. I think I've answered 13 questions in one long ramble. Did I miss anything out?
You definitely got to quite a few of those questions. Cool. So I don't know if Tsecho or Arthur wants to add to that.
Okay, let me go for it, Riyad. Thanks so much again, Nicole. I think spot on. We must always know where our bread is buttered. That's really very important, actually, because in how we do things, we must be sure and be certain that the business interest actually is well taken care of, because they might close the tap and then the foundation won't be there no more. So we always try to strike the balance. So again, it is really what Nicole just indicated, that striking that balance is very important. Being proactive about what the initiatives that you're going to be doing in the current financial year. Indicate to all the leads, meaning that all the people that really have the interest, all the stakeholders internally. Make sure that obviously you have a good buy-in from internal in terms of exactly what you need to deliver in your communities or in their respective communities. I mean, for example, as an MTN, we have regional general managers who are acting as CEOs within each and every provinces. So meaning that you need to get a full buy-in on the project. And again, because of the issue that we are very few in terms of the foundation, we're not like sales team, which is a lot of people. But obviously, as the foundation will become very few, meaning that there is an extreme reliance on implementing partner as well as the regional offices, which is really MTN's offices, whereby we say, look, now, if they don't get a buy-in on the project that they're doing within the specific particular province, the element of monitoring, making sure that things are happening or not actually might even be more tougher, meaning that you might be more costly to really implement in the region, because you will require somebody to be going there every now and then to have to look into those things. So it's really very important that actually that principle of shared value need to really be well cemented, be well entrenched in terms of how you do your projects and how you deliver them. So I think in that way, then you can be able to make sure that the issue to do with misalignment actually can really be avoided. And that's really one of the key risks that we have actually is that the whole thing of alignment and being relevant actually amongst your relevant stakeholders, amongst your stakeholders that you have in your portfolio. And that's really what's really important. Thank you.
Thanks.
I promise I'll be less than a minute. So I think for a company that is fragmented, it's very difficult, because right now we're having conversations around separate reporting. So where different business units want to do their own thing because of separate reporting from a BBBEE perspective. And with that separate reporting, both from an SED as well as an ESD perspective, there needs to be that alignment that happens. This could potentially take us back to that fragmented approach of doing CSI, which is something that we're running away from. So the complexities are just very, it's just a very complex and nuanced thing to do. But I do agree, the closer corporate social investment or the foundation works with business, the better. I think it's how it must be. We can't operate in silos. It needs to come to a point where both stakeholders work together for the benefit of business as well as societies. Thank you.
Thanks, Tsecho. And on that note, I'd like to say a huge thank you to everybody who's joined us, and especially a huge thank you to our panelists, Nicole, Tsecho, and Arthur. You know, as with these webinars, we could go on for another hour easily. We will be making the write-ups for this and the video. We will be making it available, as well as the slides. I just do want to say one more thing in closing before I hand over to the panelists for a quick one-sentence closing. if you guys want to read up, to all of the participants, to read up more on company foundations for CSI, there is a great article which Nicole has contributed to in the Trialogue 2022 handbook. And there's also the CECP report on corporate foundations. Both links will be shared with you. And just from a Trialogue perspective, I really hope that I get to see all of you in person at our conference on the 9th and 10th of May. And I see Abdullah's pulled up the poll results from the second poll, which I forgot to ask for. And with that, I'm going to say thank you to the panelists. Just before we close, if you do want to say anything in the last minute.
Who's first?
Go for it, Nicole.
So just one question that's lurking there, VAT registration. It is possible if you do the right kind of things, welfare activities. Number two, those of you asking questions around the anti-money laundering legislation, quick, if you go to you go to ngoLAW SA, I've got a page there that's got a whole lot of articles and information on that. And if you hit the contact form and ask somebody to send you the latest newsletter, that will have the update on what's happening with that legislation and those regulations. Thank you for having me. Sorry I've talked too much. It's been lovely being here and meeting you all.
Thanks so much again, Tim. I think for me, I just saw the poll answers here. I see that there's more of 60% of the people that are from NPOs. I must just indicate that again, we need that active collaborations, partnerships. Please, NPOs, as much as you are independent, fully understand exactly what the corporates are seeking to achieve. In that way, then it will make it much easier for us to partner with different NPOs, NGOs in the space. And as MTN, we are really more focused on digital education, digital skills for digital jobs. So for those who have interest in such or finding more about it, actually, please reach out to us. I think Riyadh can share my details so that at least I can be able to share it with the collective. Thank you again.
Thanks, Arthur.
Thank you. Nothing further from my side. It was a great session. Learned a lot, and thank you so much for the opportunity.
Wonderful. Thanks so much, guys. Have a great afternoon.